Gold is under pressure Wednesday. We have Peter Hugg on this edition of For Pete's Sake, checking out why. Peter, how's it going?
Nice to see you again, Alex.
All right, so Peter, we start with Greece, obviously. Greece and the European Union searching for that resolution. Doesn't seem to be much happening right now. What are you making of the ongoing discussions?
Well, there's a number of outcomes that are possible. The most likely, and that's premised on how the markets are behaving. If you look at bond yields, you look at equity markets, they seem to be expecting some sort of resolution. And I think the best we can hope for is a resolution where the EU and Greece come to terms on rolling over this debt for, be it 3 months or 6 months. Certainly doesn't solve the problem. Greece is a serious issue for the EU, and the problem will resurface somewhere down the road. But the markets are telling us that the traders are expecting a resolution and not a Greek exit from the euro anytime soon.
Now we're seeing a lot of talk that if Greece should exit the EU and drop the euro, we'd see gold prices significantly higher. Is that something that you'd see?
Yeah, I think that would certainly happen. I think the market on a macro picture is relatively short. Based on stronger U.S. dollar, based on U.S. interest rates rising ahead of euro rates, with the euro, the ECB coming in March with their liquidity program. The macro picture sets up for a weaker metals price. So if you have a situation where Greek leaves the euro, it's going to create some dislocation of capital. There'll probably be capital restrictions put on Greece. Then there's questions on debt repayment. Then there's questions on, does this flow into Spain and Italy, Portugal as well? So all of those things will create enough consternation to push gold up, and it could be significant. It could be, in the magnitude of $100 or $200 if this the Greece EU talks fall apart.
Now switching over to the U.S. and the Fed minutes are out later this afternoon. Now, do you see just the same dialogue coming from them? Any changes expected, or just more of the same and that's it?
Yeah, the numbers have been getting somewhat better in the United States, but they're not great. Inflation certainly that target for the Fed is nowhere near 2%. It's still struggling. And I would expect the verbiage from the Fed to be relatively consistent from the verbiage that we saw in their last meeting, that they're holding course. They're going to be data dependent. I certainly don't think they're going to put a time frame on when and if they're going to raise interest rates. I think they'll still leave that door open until probably at least until they see if what the Europeans are doing has any success in stimulating their economy.
Now, Chinese New Year, Peter, it's going to get underway shortly. Year of the Sheep. What do you see coming out of China pre and post celebrations as they gear up and party for the next couple of days?
Well, there might have been a little bit of buying pre the lunar holiday, starting today in China. But it's a 5-day holiday. And I would suspect that the physical offtake in the market will pretty much dry up during this period. So if anything, it's a negative influence on the metals. The metals are desperately searching for a bidder out there. And, if there is this extension on the Greek issue, the metals look heavy, and they could test a very critical level, which would be 1197. And that, in my opinion, absolutely needs to hold. If we lose 1197, I think it brings in the prospect of seeing the lows of 2014 come back into play, which would be around the 1130 level.
All right, Pete, thanks for your time.
You're welcome.
And thank you for watching this edition of For Pete's Sake. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a good one.